Whether you're a real estate broker looking to branch out or completely new to the rental market, the property management hustle can offer lucrative, consistent opportunities. Like any business though, it's important to have a clear understanding of the potential income and expenses that come with managing properties. In this video, we'll delve into the key aspects of property management income and expenses that aspiring entrepreneurs should consider when launching their own property management venture. You can think of property management income and expenses as the fundamentals of property management accounting, a report that keeps your owner's bottom lines and that of your company's in the black. We'll walk through the most common kinds of income and expenses property managers can expect and some unique ways to add to the income side of your P&L. We'll also talk about some of the best practices to keep the profit in your profit and loss statement healthy. So let's get started. First, let's quickly go over a profit and loss statement, or P&L. A P&L helps you enumerate money coming in and money going out, ensuring your net income, or your income after expenses are subtracted, is positive rather than, well, negative. It's a quick way to see how you and your property owners are faring financially over a month, quarter, year, or even year over year. Fun fact, net income is also referred to as the bottom line. That's because it's the final calculation on your P&L that appears at the bottom of your spreadsheet. You should keep a P&L or income statement for each of your owners, as well as a separate one for your own business, to keep track of their bottom lines as well as yours. Right now though, we're going to talk about your bottom line and the kinds of fees you can charge to keep it on the positive side. Property management companies have several sources of revenue that feed the top line of their income statement. They cover everything from rent collection fees to vacancy fees to finder's fees. While many fees are paid by owners, there are just as many that tenants and homeowners and community associations pay as well, including late fees, amenity fees, and pet fees. Let's take a look at the major ones most property managers charge. The primary source of income for a property management business is the management fee charged to property owners. This fee is typically a percentage of the property's monthly rental income and covers services such as tenant screening, rent collection, and property maintenance. For associations, the managers typically charge a flat fee. Next, let's talk about onboarding fees. When property managers bring on a new owner, they often charge an onboarding fee, which covers the cost of getting them set up in their property management systems and doing an initial inspection of their properties. There are also a number of fees related to finding tenants for vacancies. Those include tenant placement fees and leasing fees that are charged to owners, as well as application and lease renewal fees for tenants. While not a primary source of income, some property managers earn a margin on maintenance and repair services provided to tenants. This arrangement requires transparency and proper communication to ensure ethical practices. A lockout fee is exactly what it sounds like, a fee for tenants or residents who lock themselves out. It's sometimes referred to as a rekey fee. There are also some fees related to delinquent payments. Property management companies often impose late payment fees on tenants who miss rent deadlines. They may also charge a non-sufficient funds fee for checks that don't clear. These fees can provide an additional source of income, but it's important to establish clear policies to avoid tenant disputes. However, particularly after the pandemic, some property managers aren't so quick to charge a late fee. Instead, they work with their tenants or residents and ensure clear communication from the beginning. It's also important to check with your local and state laws concerning late fees. Those are some of the basic fees. But there are other fees property managers can charge to add new sources of revenue. For example, if you allow pets, you could charge a pet fee to cover the cost of potential damage. Or you could offer an amenities package for an extra fee. Amenities can cover anything from regular HVAC filter replacement to package lockers. If you have parking spots, you could charge a parking fee. And if you offer online rent payments, you could charge a convenience fee for that, like Buildium's ePay allows you to do. It's important to note that depending on where you're located, some of these fees might have rules and regulations attached to them. For example, late fees are highly regulated. That includes if or when they can be charged, how they should be structured, who keeps them, and how much they can be. Make sure you are very familiar with the laws and regulations for property management fees, both in your state and your municipality. Now, this is just scratching the surface of revenue streams for property managers. If you'd like to learn more, check out our guide, Generate Revenue Without Adding New Doors. We'll drop a link in the description. Of course, you can't measure the success of your owners or your own success solely on the money you bring in. That would be like trying to fill a bucket with a hole in the bottom. You keep pouring water in, but you haven't taken into account the water flowing out. Like the hole in the bucket, you have to take into account the money flowing out of your business. Check your buckets, people. Let's take a look at some of the more common property management expenses. First, there are a bunch of expenses that fall under the umbrella of overhead. Basically, it's the money spent to keep the lights on and the office running. wherever that may be. Those costs can include rent and utilities for your office space, supplies, which includes everything from computer equipment to paper, and costs for any vehicle your company owns. If your property management business grows, you may need to hire employees to handle various responsibilities, such as leasing, maintenance, and accounting. Employees' salaries and benefits should be a significant consideration in your budget. Contractor fees include the fees that contractors charge for services, materials, and permits. Then, there are insurance and licensing fees. Depending which state you operate in, you may have to get licensed as a property manager or even as a realtor. To learn more, you can check out our post on property management licenses and certifications. Property managers also need adequate insurance coverage, including liability insurance and errors and omissions insurance. Next, service fees. Service fees are costs for subscription-based software and other services that span different areas of your business, from project management tools and property management software to tenant screening and marketing services. If you're a member of a professional organization that charges dues, such as NARPM or a chamber of commerce, you should definitely include those expenses. Finally, you're probably going to need a lawyer for drafting lease agreements, handling eviction proceedings, and addressing other legal matters that can arise in property management. Now that we've covered some common property management income and expenses, let's walk through some best practices. To keep your net income accurate, it's important to start with an accurate chart of accounts. Many accounting software solutions include a chart of accounts feature that then pulls the entries into a P&L and calculates your net income automatically. In fact, Buildium has all of that in its accounting software, custom built for property managers. To learn more, check out the links in the description. Now you have accurate numbers that are updated in real time. That's great, but those numbers are only good if you're keeping an eye on them. Keep tabs on your bottom line to make sure it's not starting to slip. If it does, jump into your accounting software to see where the problem is. That way you can fix it before it really becomes a problem. If you're consistently in the black, congratulations, but don't rest on your ledgers just yet. See what I did there? You never know when an owner may leave your services or simply sell off their properties, or even when the market may turn. Use your chart of accounts as well as your net income to determine when to add new clients and how many to bring on. Determine your growth plans for the next few years, aggressive or not, and use your income and expenses as well as your staff headcount to determine when and how to implement it. Finally, an accurate chart of accounts that includes every income and every expense can help you find cost savings as well as new revenue opportunities. If you manage HOAs, for example, you may find your staff is spending a lot of time and money collecting and sending out disclosure documents for properties on the market. There could be an opportunity here to save money and perhaps even add revenue by bringing on a service such as HomeWise Docs, which facilitates that process for you, allowing you to charge residents for the service. So there you have it, the basic nuts and bolts of property management income and expenses and some of the best practices to get you started. Of course, there are some property management software solutions that can help you automate all things accounting, saving you time and headaches. You could give Buildium a try. It's an all-in-one property management software that includes robust accounting features, as well as maintenance, lead to lease, business operations, and a host of other tools made specifically with property managers in mind. Check out the link in the description and get started on a free 14-day trial, no credit card required. And don't forget to like this video and subscribe to our channel to learn more property management tips and best practices. Bye for now.